Good evening and welcome to the Australian Stock Market Show. Now last week the sellers took control, steering the market down over 3%, making last week the most significant weekly drop of the year. So stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the world currencies, and for our main topic in tonight's show we'll get into the top 10 most consistent ASX growth stocks. First up, we'll share our hot stock tip for the week, so sit back and relax. Again tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the important questions around the stock market. Tonight we're excited to share with you our thoughts on Silver Lake Resources, Ansell, Beach Energy, World Currencies and more. So strap yourself in for a big show as we'll get into these soon. I'm Dale Gillham and I'm your host for tonight, and joining me are two of our team of highly experienced analysts and professional traders, Janine Cox and Philip Tortevsky. Good evening team, how are we today?
Fantastic. This is like being in a sane moment in an unsane world, isn't it? A world gone mad. This is the place that you can come to just relax and enjoy the stock market.
Relax and enjoy the stock market. I think that's a good start. What do you reckon, Phil?
Yeah, I love the sounds of that.
Right. All right, well, tonight, as we mentioned, we'll get into our take on world currencies. But first, let's take a look at this week's hot stock tip. Phil, what have you got for us tonight?
All right, so the hot stock tip for tonight is Silver Lake Resources, stock code SLR. Now, if you're a viewer of our Hot Copper show, you'll know that I had this stock as my hot stock this week also. And I'm not getting lazy, but I really like this stock. So anyway, let's get straight into it. On your screen now is the marketindex.com. And you'll see Silver Lake Resources is a multi-asset gold company operating in the eastern goldfields and Midwest regions of Western Australia. It's into exploration, mine development, mine operations and the sale of gold and gold copper. Some statistics here. It's got a year-to-date 2024 performance of positive 15.97%, a one-year performance of positive 12.65 versus the sector of positive 12, so it's almost thereabouts, and it is beating the ASX 200 on a one-year basis which is doing 7.8%. Now, the market cap is 1.28 billion, which is quite nice, and it is ranked number 282, so just inside the top 300 there. And if we bring up the chart, now I want to focus on the monthly chart for now to start things off, and you'll see this stock since November 2000 or September 2015 has been trending up really, really nicely since falling all the way from the high in 2012. And, you know, we were looking at this nice momentum line where the stock came to find support August, September of 2023. I've also marked some price retracements. You'll see during this up move here, this longer term uptrend, it had a previous fall of about 60% where the stock resumed and did great things. And now we've had another nice retracement of around 70%. And, you know, Janine, we've spoken about this on Monday where we talk about trading on confirmation. And, you know, it's one thing when a stock comes back and tests a level if we bring the chart back up, but it's another thing waiting and knowing when that confirmation is. And we're starting to see that now with this stock.
Looks amazing.
It's giving us those higher highs and higher lows. And I just wanted to bring up one more thing because, you know, the market's been falling in April. And a lot of the times when the market falls, people can sometimes, you know, crawl up in and say, oh, I'm not going to trade and I'm going to stay away from the market, which is totally fine. But there are opportunities. There are always stocks that are bucking the trend. So if I bring up the seasonality chart here for Silver Lake, you'll see May and June and July fare quite well for this stock. Generally, it has a history of rising, whereas if I bring up the seasonality of the All Ords Index, look what it does in May and June.
So it's pretty stable through that period.
Falls away. So we're looking at a stock that does have the potential to outperform in the next couple of months. So really, really nice. Put it on your watch list.
Well, I'm sure you've got something to say about it.
Well, look, I'm not going to say anything negative. Are you surprised?
Well, a little, but I'm happy.
It looks amazing. I just like the trends that this stock makes and the way that it moves up and down. And it's volatile enough. If we can just have a look at the weekly chart quickly, to be able to make some good money short term. So is this a short term play that you'd suggest that people take on this one, or could they go medium term potentially?
I mean, the way the stock's positioned at the moment and where it's found that support, and we are on a monthly chart here, we are looking at a much longer term perspective. And given, all the things that are happening with gold and all that kind of stuff, this, to me, is more of a longer term picture.
Very good.
And you said it's gold miner, right?
Yes.
Yeah. So, I mean, gold's been quite flat of late, and it's going up.
Yeah.
So if gold starts to move up, you've got to think then that's got to push that stock even further. And I think we're going to be talking with a gold expert for Talking Wealth.
That's right.
In a couple of weeks, our resident gold expert. So just watch out for that, our take on gold. But that is it for our weekly hot stock tip. Now, shortly we'll get into our topic for tonight. But before we do, right now is your opportunity to have your questions answered. Now, call right now on 03-9290-9988, or you can text your question to the number on your screen. Now, the first caller into the show right now gets a free copy of my book, Accelerate Your Wealth. So pick up your phone and dial 03-9290-9988. Now, while you do that, tonight we'll give you our thoughts on world currency. So let's get into that.
On your screen right now are the world currencies. We've got a watch list of the major world currencies there, and we've got at the top of the list the British pound versus the US dollar. This is actually for the year down around 3%. The Canadian dollar is actually down 3%. Now, if we look just down the list there, we can see that it's not looking to crash hot, Phil. Right at the bottom of the list is the Japanese yen versus the US dollar at the moment, which would be interesting to see a comparison of what these currencies were doing last year at this time of the year. Perhaps we can do that at another time, but right now it's a sea of red. So look, perhaps we'll go and have a look at the Aussie versus the US dollar just to see what's going on more locally. Now, we can see there a really nice consolidation that's happening there in the currency. And the interesting thing is that our currency is trading at around a level where the RBA is probably pretty happy. I know that I can remember them talking about it going to 62 cents, and that if it went there, they wouldn't want it to go much further than that. But I'd say, while it's trading 62 to 70, anywhere in that zone, they're probably pretty comfortable with that. Yeah,
and I mean, to me, the way it's ranging sideways just talks a little bit to indecision, to be honest. Obviously, there's been all this talk about rates being cut soon, but nothing's been done yet. They talked about it in the US, and Jerome Powell came out not too long ago saying that he's flipping the decision making, saying that might not be the case into the future. And I'm seeing that on the chart. I'm seeing it go sideways. So perhaps the market's waiting to see whether we are going to be cutting rates or not.
Yep.
Yeah.
I would have to agree with that. I mean, if the US cuts rate, that might push some more buying of our currency because of a higher interest rate, so that might do that. But that's really what they're looking at, isn't it? Yeah. If you're looking at overseas countries and big institutions buying bonds in Australia, which pushes the demand of our currency up, pushes it higher. But then we're trying to, stimulate manufacturing. So we want a lower dollar to stimulate manufacturing, so that we can export overseas. So it's a bit of one of those
catch-22.
It really is. It's like, how do we balance this out at the moment? Because manufacturers have been hit hard because of energy rates going through the roof. So they've been going broke and shutting down. So it's going to be an interesting play what the government does.
And if we do raise, how much is that? When's the next level that's going to break everything?
Yeah. I don't know, so let's stay tuned for next month and see what's going to happen anyway. But that is it for our thoughts on world currencies. But before we get into our first email, remember to get your questions answered live on air, you will need to text or call into the show. You can also send your questions to info@wealthwithin.com.au and we'll answer them in next week's show. Now let's get into our first question. Our first email is from Matt, who writes, "Hi team, I have a quick one regarding Ansell. I know that Janine recently did a podcast about capital raising, which is very timely for this question. I'm most interested in what happened in the lead up and then subsequent to the share purchase plan announcement. Price had been rising up to $27.50 into the close in the bottom half of the bar last week at $25.98 and falling about 4.5% on Monday at the announcement. It is currently trading at approximately $25. In your opinion, was this rise coincidental or people with inside knowledge wanting to get the rights to the share purchase plan, which offers the discounted price of $22.45 or 2% discount to the volume weighted average price during the 5 days leading up to the closing date, whichever is the lower? Love your work. Thanks, Matt. I'll go to you, Janine.
Lovely that he's listening to my podcast. That's fantastic.
Everybody listens to your podcast. If they're smart, wise people, they will be listening.
Capital raisings are really interesting things from the point of view of what it can do to the share price. Any corporate action is really interesting. Sometimes you can see, sharp drops in the share price as a result of an announcement, or it can go the other way. In terms of this one, I think that there's nothing to worry about in terms of the way that the share price is tracking at the moment in relation to this share purchase plan. But I don't think that there's anything too, concerning about what's going on.
No big conspiracy, that's what you're saying. No big
conspiracy. Look, I mean, if you just look at the history of this stock, sometimes it just jumps up for a couple of weeks and then pulls back again, and I just think that's what it's doing at the moment.
Well, I'm going to ask you, because it's obviously, this is normal, that's what you're saying, but is this a piece of arbitrage? That the instos are going, okay, we can do this, we can get in here, we can get the share purchase plan and buy a lot of stuff, and then get this extra little bit of a clip there.
Look, I'd say that they'd have to be desperate at trying to do that in this case, just looking at it, because you can make far more just from buying the share and, just focusing on the capital growth side of it. That's what I'd say.
But I mean, we know the big end of town, they do these, trying to get little clips here, like 1 or 2% here and there. Because when you're trading or putting, tens of millions of dollars into a stock, that adds up to your bottom line, doesn't it? And if they got that long-term thinking on that stock, and they can get this share purchase plan and pick it up for 1 or 2% cheaper, as you were saying, well, then why wouldn't they do that if they were going to go long term on it anyway? So that's what I'm saying. Is it a little bit of an arbitrage type of thing? Could
very well be.
They'd probably be doing that. Do you want to say anything before we finish up?
I totally agree. Yeah.
You were just nodding your head, going,
I was, yep.
Not going, pick me. Well, anyway, we do have a caller on the phone now. Welcome to the Australian Stock Market Show. Who have I got on the line?
It's Dion.
Hi, Dion. Welcome to. Thanks for calling in. And what's your question for us tonight?
Yeah, I was just having a look at an entry for Iluka Resources. So it broke a down trend line on the weekly chart back in January. Also came off some support at about $6.20 at the time.
Yep.
So I'm just currently monitoring that because it looks to be getting some momentum on the upside. And I was looking at an entry around about the $8 mark. So I was just wondering if you could provide some thoughts on that.
Okay, you're looking short, medium, long term?
Medium.
Medium term. All right, thanks for calling in. Dion, the guys have got it all up and they'll answer your question right now. What do you reckon, Phil?
Luca, we've got the chart up on your screen right now. And look, obviously the stocks has come out of that significant fall from June 2023, which has been, one of the major falls on this stock of recent history. But from a longer term perspective, it is in an uptrend. And, it is quite common for stocks, once they do have these big falls, if they start to, consolidate a little in the type of fashion that it's doing now, does show promise. You do start to see, these series of peaks and troughs start to formulate in a tight, nice range before the stock were to break out. And I like the idea of $8 being a nice entry level, because it is, clearing all this price action here. So I think he's got a good plan. Just be wary that, you are up against this huge fall. So keep it tight in terms of
from the point of view of the momentum could still be down. That's what you're saying, isn't it?
Yeah, in terms of what you're up against in the recent history. But the way it's forming now and where you're looking to enter, it's a great idea. Why not?
I mean, he's buying on a trend line, and I know what I love when I'm buying on a trend line. If I can get a confirmed uptrend before I buy on a downtrend line, I reckon that's just like the simplest, easiest trade you can do, and some of the lowest risk trades you've got, because your uptrend line is a trailing stop already, and sometimes that might only be 5 or 10% away from the buy price, really nice and tight, which means you're going in with very little downside, already confirming it's moving up, so very little risk on it. I love it. I think it looks good.
Look, for me, I look at the monthly chart first. I just want to see, what the personality of the stock is like. If I can sort of trust that rise, because looking at the way it fell here, it's very similar. This same sort of toppiness that occurred is pretty close to what happened more recently. And so what happened after that big fall? Well, it gave the impression that it was going to recover, and then it didn't. It's got this same sort of resistance here from these lows, same sort of resistance from these lows. It could just go up to that sort of, above $8 and knock its head, and that's what Phil was sort of being a bit cautious about probably as well.
Okay.
And then before it comes down. So, as long as he's got a good stop loss in place, that's really the point here.
Very wise words. So there you go, Dion, and thanks for calling in. Now we have an email from Sydney who asks, hi team, at Wealth Within, Phil's selection of DRO as a hot stock is spot on. Now it's gone up so much since the recommendation. Where should the stop loss be set and the price to take profit? BPT has dropped a lot as a result of production problems since the recommendation 2 weeks ago. Where should the stop loss be set and the price to take profit? Please suggest a stop loss and profit target when a hot stock is selected. Keep up the good work. Cheers, Sydney. I'll go to you, Phil, because it was your hot stock too. What do you have to say to Sydney?
It was. I mean, first, Sydney, it's very important to know that these hot stock tips are stocks that we like, and it's, we like the theme of the stock and it looks good, but we're not necessarily giving you buy and sell recommendations on this show. So please be wary of that. So when you're, asking for a profit target and a stop loss, you're almost asking for us to trade the stock for you.
And they need to do their own research. But I mean, you always say, look, if it goes through this level, then I like it.
Yes. And
if it falls back below that level, then obviously it's going the other way. So, I mean, it shot out and then it's reversed. But like you're showing there, it hasn't broken the angle of that trend rising up underneath it at the moment. So it could just be coming back to that line or being squeezed sideways before it pops out again. That's really important to note.
Yeah, absolutely. I mean,
but I like how you picked the one that had fought. Like you could have shown the other stock because he asked about 2 stocks.
Yeah.
And
he's asking about BPT, which he's asking about what it's going to do.
Yep.
I don't believe he owns it now. He might. I don't know. He doesn't say. But I believe he bought drone.
Yes.
But to me, the answer is if you don't understand the stop loss and where you're going to exit, then you shouldn't have entered in the first place. That's my thing, because we're never going to tell you a profit or where a profit target is, because we don't use profit targets ever in our trading, because we just let it run until it runs out and then we get out. So, and it's also irresponsible for us to give him those figures because things change tomorrow. We might change. We might change our stop loss tomorrow. Or might change where we think it might go to. And if somebody's going, oh well, Phil says it's going to go to this price, then I'm going to hang on until it gets to that price because Phil's always right. Because Phil's always right. You know what I mean?
Yeah.
And then it doesn't get to that price, and it falls away, and then they hang on hoping it goes back up, and it's just. Yeah. And the stop loss might change tomorrow anyway. But do you want to have a look at BPT, or have you had a look at it?
We've had a look at BPT, and look, just like Janine said, exactly, from a longer term perspective, in the report I did mention that there was this resistance above around that 180, 190 level, which the stock still hasn't cleared through yet. So I think you might have jumped the gun a little early on this one, but if it can get through that $2 level, it does look interesting. For now, it's just pulling back into this nice momentum line that it's been going through. So nothing to worry about. I mean, we normally pick one stock per email, so that's why I haven't gone through Drone Shield.
Yeah, because we've covered that a few times.
We've covered that a lot, and that stock has gone through the roof. So, please do your own, because when when you're buying a stock yourself, it's very important that a stock selection or trading a stock doesn't just involve looking at a chart and saying, oh yeah, this looks good from a holistic technical point of view. There's back testing involved. There's a lot of strenuous stuff you do to a stock before you get in, or that we do anyway. So make sure you do that before you get into a stock. Have your entry rules tried and tested, have your stop loss in place, just so that you can avoid having those emotional moments in the market.
Yeah, I know, just to wrap up, I know when Janine and I used to do stock tips years ago, we found even we could be like 100% right, and people still lost money because they wouldn't follow what we're talking about, because they didn't understand why we set things where we set them and how we did that. And it's the same here. It doesn't matter what we tell these people, and it's why we don't tell people stop losses, and we don't tell them the exact buy point, and why we don't tell them profit targets. You know, even though some people ask, going, well, these guys mustn't be good because they don't give me these things. But it's because we want to empower you. Good mentors don't disempower you. A good mentor tells you what you need to know and pushes you to be able to do it yourself and helps you and motivates you to do it yourself. If you're relying on somebody else to give you all of those signals, then you don't know enough on the marketplace, and maybe you shouldn't be trading those stocks. Maybe you should buy my book and figure it out how, because then it'll give you so much more power because you'll control your investing and your trading yourself, which puts you in a much better place than most other people. But anyway, that is our take on BPT. Now, you've probably heard me saying trading doesn't have to be difficult. It can be very simple, and oftentimes simplicity is what separates the best traders from the rest. Now, what I mean here is that the best traders have the simplest plans. Now, the issue we find with most traders is that they don't know the best way to simplify things, and so their plans, if they have one, turn out to be complex and difficult to manage, often resulting in the trader making a lot of decisions on gut feel rather than on solid rules. Basically, they guess, and this is not highly repeatable and not conducive to making consistent profits. So if you are inconsistent with your trading, then listen carefully, because tonight's topic, we're going to show you how you can simplify your trading strategy and make more money. And part of that is by sharing how to identify stocks with consistent double-digit growth. But before we do that, I want to address a white paper released by Torre with research that suggests that if you are able to select stocks that have consistent growth, you will outperform stocks selected based on magnitude of growth. Now, this is very interesting, because what I see most new traders do is try to find that one stock that will shoot the lights out, rather than find stocks with consistent growth. Now, Janine, I'd like to get your thoughts on this, as I'm sure you see this all too often.
Yeah, look, I mean, it's so true, because people are always chasing the best, the hot stock tips, so to speak, as we were talking about before, aren't they? Instead of actually looking, and I think, what really struck me is with the process that we teach people is when I heard the penny drop for somebody is when they saw the back testing and how that process works, and they can actually see whether a stock is consistent or not.
Yes.
That's really powerful for me. And so look, by finding those stocks that are actually consistent over time that can generate the returns, it takes a lot of the hard work out of it.
Makes it simple.
You're more likely to rely on them. You can sort of have that confidence in yourself in terms of when you're trading them, because you know that the rules work and you know how often they work. So I think that it's really important for people to forget those ones that sort of punch the lights out. But there's always an argument for the other side, isn't there?
Well, there is, but you see, you only have to go into the World Wide Web and you see brokers' websites and it's all like, oh, this stock's gone up 500%, or get on our platform and there's 2,000 instruments you can trade, and I go, God, that's making it really complex and really, really hard. Anyway, so you're saying that people should only look for stocks with consistent growth, or can they do both? I mean, that is, look for consistency and also look to trade the unicorn stocks.
Unicorn stocks, well, I don't really like those sort of sexy terms that they use.
What about black swans?
That's the opposite. You're going to die for that one, aren't you?
Now, black swan events are unusual events, which is like these.
But I mean, look, for those unicorn stocks, maybe there is an argument that you can have some of those in the portfolio, but the answer is really not. That's
not what you should be focusing on.
Not what they should be focusing on.
Because I mean, Phil, it's like we often see traders and beginner traders, and they're just looking at this plethora of stocks and hundreds of stocks, and yet the best traders have a narrow focus down into a small band of stocks that suit what they need to do, good growth stocks like you're talking about, and by doing that, they save a lot of time, they save a lot of heartache, they save a lot of analysis, they make a lot more money, and they have a lot less trades.
Like you said it before, the best traders, you'd be so shocked how simple their strategy is.
Yeah.
And that's the point here.
Yes, keep it simple anyway. But now when it comes to choosing the consistent growth stocks, there's an art to it, isn't there? Now, what's important, guys?
Well, there is an art, and it's about looking for a pattern or a way that the stock is trading. So it's about understanding. You've got to be able to read the charts for a start. Otherwise, you won't be able to.
What do you mean by pattern?
Well, Phil, I can hear you just took a breath in. You were just dying to say something.
No, I mean, first it's to say what's consistent, because two different people can have two different ideas on what's consistent. And I know for us, consistency is having a stock, obviously for starters, with price history, trading companies that are going to be around in 10, 20, 30 years' time. Looking at the chart, as you said, Janine, and looking at those movements, making sure they're consistent and they're easy to trade. Is the stock consistently going up year on year? Is it giving you nice, clean price action? They're the things you want to look for as a beginner trader. You don't want to be stuck trading in the stocks that we just spoke about, these volatile stocks, the unicorns. They don't give you clean price action. They don't give you liquidity. You don't know if they're going to be there tomorrow. There's a good chance they might not be.
So how many of those should be in the portfolio if you wanted? Because not everybody wants to trade.
For a beginner, if we're talking about beginners, I'd say don't even bother.
But we did that presentation, that hour-long presentation on when the stock market's going to crash on talkingwealth.com. And we bring up Commonwealth Bank and Bitcoin and show exactly what you're talking about, how consistent and easy it is to make money on these things. Yep. So if you haven't seen that, it's on talkingwealth.com. You can get a free 7-day trial if you head over there. So it really is about the criteria that you set that determines whether you're holding the right stocks. Now, there's a good Warren Buffett quote for this. He said, all there is to investing is picking good stocks at good times and staying with them as long as they remain good companies. So Phil, Warren makes it sound too easy. Do you agree with that, and what's he saying?
Not really, no. And basically, to answer that is, how many good companies lost more than half of their value during the GFC?
Yeah, but you don't stay with them if they're not good companies anymore.
And that's the point, But they're still good companies. Commonwealth Bank and all these fell 50% during the GFC. Yeah. And you are somebody that was looking to retire in 2007, just before it happened. Yeah. That just because they might be thinking, oh, these are good companies, I'll stick with them. Well, that person may not be able to retire because the market didn't recover 10, 12 years later after that, especially the index.
Yeah.
So for me, it's most important, regardless of the company, good, great, you need to look at the chart. You must look at the chart and follow price action, because as we always talk about, price action is the only unadulterated real information that's happening, and you're trading price action.
Well, in the GFC, when the market started to tip over, the industry was telling everybody, these are good companies, they're now cheaper, come on and buy. So we saw that explosion of, I guess, people who had never been in the stock market buying all of those shares. So good companies were turning bad, but it was like the Titanic sinking and nobody knew that it was happening at the time.
Yeah, but if you got companies before a crash, like BHP or banks or whatever else, and 6 months later they're at half the price, they don't halve their revenues and profits in 6 months. They just don't do that. Even with the COVID pullback, what they were worth the day before the COVID correction, you can't tell me their business model changed overnight that quickly that they halved in price. And that's what you're saying, why you're disagreeing with Buffett. He's talking about fundamentally companies being very good, and when they turn out to be not fundamentally good anymore, that metric is then get out of them at that point in time, so they get really sick.
But that shows you that using the rules and tools gets you out earlier when that perception starts to change and it does start to turn.
Absolutely.
You're able to get out.
Yeah, good points, guys. Now, before we get into the stocks, we need to address the issue we mentioned a minute ago, and that was the fact that we find most traders don't know the best way to simplify things, and so their plans turn out to be complex and difficult to manage. Now, I want to talk to you about this one, Phil.
Yep. Yeah, they do. Just as I mentioned, the best traders, they keep it so simple. And, it's just that process of things. It happens in all walks of life. Like, even if you compare it to something like, now I'm digressing here, but martial arts, slowly you learn all these techniques, but then you realise you condense it all back into really it's one or two key principles, fundamentals. And the real genius is when you can, in simplifying things.
Yes.
I've even said it about the course. The genius is in it being so simple to understand and to apply. So, we all start out as complex, and the great ones can simplify their work. So the key is to get there as quick as possible, or to learn to get there as quick as possible.
Yeah, I know. I've seen people I've chatted to them what's their trading strategy, and I say, well, what's your trading strategy? What do you do to determine to buy? And they go on this long-winded spiel, and I go, I don't even understand what you're talking about, and they can't really explain it properly. That's what I mean by too complicated. You should be able to write everything down and hand it to somebody else and they understand it implicitly straight away, keeping it simple. But anyway, it's time we reveal the best of the top 10 consistent growth stocks for double-digit growth and the right time to buy. What have we got, guys? I'll go to you, Janine.
All right, now there's an interesting list here, isn't there?
There
these
is.
are stocks that actually, well, we've talked on a previous show about stocks that trend really well.
Mm-hmm.
These are typically stocks that year on year can have really good growth. You know, they've got a track record.
Like a CSL, a Cochlear.
Oh, how did he know that? Did you tell him?
Where's
before we started?
He must know a thing or two.
Yeah.
I don't know about Woolworths right now. It's not doing
Macquarie Bank,
too good at the moment. But
Combank.
yeah.
Just the top 20 stocks.
Yeah, so we've got a few of those that have had a track record. So it's also about, like Toro was talking about, you know, having that good growth comes from good earnings as well. So obviously the share price is going to be more consistent over time if there's something of substance behind it to back that growth in the share price.
But what we find, and before you look at the stock, we find a lot of people go for stocks that are difficult to trade. So what you talk, and what I mean by they're volatile, they're erratic, and it's quite often that unicorn that you're talking about, they're chasing the unicorns that are very difficult to trade.
Often the lower liquidity type
and
shares.
they're lower liquidity, but good traders go for consistency first. It's not trying to shoot the lights out with every trade. It's being consistent with every trade. And if you're consistent, you'll make money consistently, you'll compound more, and you'll build a portfolio faster and make shed loads more money than anybody trying to do unicorns all the time, which is what we see the majority do. But the good traders and the very good traders have a very simple plan to go for a very small number of stocks consistently and just smash it out that way.
And look, not many people have the, I guess, internal fortitude to go for those type of unicorn stocks anyway, because I've met some guys who have done that, but their win rates are terrible. But
it's more guess. It's more guess. It's all, what do they say? More A than class. So, from that kind of view. But if it's simple, and people think because it's simple, then it must not be profitable, but it's so much more profitable. And we see people go down the wrong path, then they come and do our course, and then they still fight with us a little bit, wanting to go down, I still want to trade these CRAPPY stocks, but then they eventually go, hang on, if I just listen to you guys and follow what the experts are telling me, their trading just turns around 100% and they start making lots of money, and then they get to have a lifestyle as well because they're not chasing their backside.
And not just profitable, scalable.
Scalable, yes.
And as you go further on in your trading career, that's going to play into account because, a lot of these lower liquidity stocks, there is no scalability there.
Correct.
You can only put in a certain amount in terms of your position, regardless of how much they fly or don't. But when you can have a strategy on one of these big stocks that are liquid, highly liquid, and you can scale that, then, you can start dreaming,
Okay, so what's the first stock, Janine?
All right, look, the first one that we've got on the list is actually Cochlear. Now, you mentioned CSL before. Well, yes, that is on the list as well, but we'll go to that one in a minute. Two healthcare stocks, which I thought you'd be interested to understand why. But anyway, looking at the history of CSL, starting on the monthly charts, a really eye-opener.
This is Cochlear, not CSL. That's the next one.
Eye-opener to this stock. Now, there can be periods where, Cochlear will have amazing growth and we can see these, like 75%, even during a big sideways move, a stock like this can actually produce great opportunities to make growth and then decent runs. And then it might go sideways for a while, like it's done again, and then big runs. CSL's just making a sideways move at the moment. But it's more consistent in terms of the reliability of it. So right now we're just looking at Cochlear and waiting for the next pullback in price, because there's a nice trend up here which it may soon come back to, but once that happens, then we should get another opportunity in Cochlear.
Yeah, I think the beauty of these kinds of charts is that really more often than not you're trading in an upward market, which is typically called a bull market, and it is so much easier to trade in this type of market versus trading a sideways type market or a down market. But if I even bring up the yearly chart here, you can see pretty much, most years this stock is breaking out to new highs. And having that safety net, knowing that, I'm trading a stock that with statistics behind me, it is going to rise year on year.
Because I did a lot of research on a lot of these stocks and I spreadsheeted it all, and with Cochlear and CSL.
Yeah, you looked at 1st of January to the 31st
Yeah, and I
of
did
December
it over
just to
a period,
see.
and over 1 to 2 decades, these stocks were averaging 20% plus per year over a decade to 2 decades. And I went, well, it's pretty dumb if you don't go and buy these ones, even if you're a buy and hold investor. It's like, it's so simple. Again, that's why we say, why complicate it? If 20% per annum on a stock is pretty good for you, why go for these unicorns and play hit and miss game?
Exactly.
You know, to me. Next stock?
All right, so next we've got CPU. Which,
another lovely one.
Another one, obviously you can see that this one, obviously within these periods that it does go up and down, it is generally moving higher. I mean, if we bring it
It has great trade trends, doesn't it?
Look at that, the way it trends. I mean, we're looking for those peaks and troughs, those uniform peaks and troughs, and this stock does provide those. I mean, and that's a point in itself, because when you do have the skill set to know how to trade a upward type market, you know, you're obviously buy and hold gives you one opportunity, let's say, to get in and out. But if you can capture multiple opportunities of that same move, you're just compounding and amplifying that return so much more. And stocks like this that do trend really well give you those opportunities with some really, really simple rules.
But the brokers are telling me to
chart,
trade a lot, and their brokers are telling me to trade all these thousands of instruments.
Well, the brokers,
because they've just got to turn.
The brokers need to
turn,
collect commission, don't they?
Yeah. Yeah. People don't realise that.
You know, with this stock, I mean, there are stocks like this that you can trade on the monthly chart, and it's much lower risk. So that's the beauty of these types of stocks that trend and give you these more consistent returns over time when you get the opportunity to trade them.
So the next one?
So this is the one you were talking about before. So here is CSL. Now, I mean, this has just been an amazing stock to look at. I'll just give you sort of an idea on this one. Now, we're just waiting for this stock to do something. It looks really interesting again with this sideways move, but some really interesting returns there. And Phil, you showed the yearly chart on the others. I'm assuming you're going to show the yearly one on this one as well.
I could, yeah.
But you can see it's accelerated away into the rise. So as it goes higher, it just accelerates. You know, even prior to this, you can see the rate of rise accelerating into the high, telling you that it could potentially be near a high. But once we get a move through all of this, I see CSL taking out that high again.
I am so waiting for this stuff.
Yeah.
And it just even speaks to its strength, because, you know, obviously 2020 was around the COVID time. Yeah. And how many stocks did we see from that time just dump all the way down? Whereas this one's still holding. I mean,
very, very stable, isn't it?
People with that, you know, more medium term, longer type mindset, you're looking at a 29-30% drawdown, which is not the end of the world versus what you would have seen with so many other stocks that are much, much more volatile, particularly during these, you know, one-off events. You know, so it just speaks to the fact that why make it hard for yourself? Find these easy type stocks that you can trade and make your life easy. I mean, it's a no-brainer.
Did you want to have a look at the weekly chart with CSL just quickly? Just looking at some of these rises, even for someone who's a shorter term trader to be able to trade this, we're talking more consistent double digits, more for medium to long term trading. But I mean, even short term trader, you just have to look at a stock and say, okay, people think, oh, big top 20 stocks are dull and boring, but if you can find some of these rises in here and you can see that sort of return, you know that you can make a piece out of that in the middle of that run there. And that's really important as well. Just even the recent rise off the low, there's not an entry rule, but once it gets going again, there'll be lots of opportunities, short, medium and long-term traders.
And look, I agree with that, but I think some of the issues that we find these retail traders, when we talk to them, it's like they might go, oh, look, I do 50 trades a month, and I go, great, you don't make much money. And they're like, how do you know? I go, because you're wasting a lot of time because you're making your life difficult, chasing the market all the time. And they don't understand that. And, you know, we could do...
So you're saying going from like one stock to another and trying to
they're just getting in, getting out and doing little profit stops and all sorts of other stuff. And they put a lot of effort in to get a little bit of money because that's what they think they should be doing, because that's what the brokers are pushing them to do. And as you said, brokers are there to make money on your trades. They don't care whether you make money. It's irrelevant to them, you know, because they make money whether you do or not, whether it goes up or down. But to me, what we're saying is have less trades, make more money by changing the style of stocks you're doing and how you're actually doing it and simplifying your life. And stocks like CSL and Cochlear are just so easy to do that with.
And
have a lifestyle.
A lot of short-term traders, they don't ever look at a weekly or a monthly chart. So how do they even know that they're trading with the overriding trend? I mean, how much nicer would it be, even if you are a short-term trader, knowing that you're trading with the overriding uptrend or one specific move, being with the longer-term picture? It's going to make
picking the higher probability moves.
Well, that's the point. It makes it higher probability that you can enact that type of strategy. But like you said, when you factor in spread, commission, holding rates, all that kind of stuff, it is so much easier to just trade less, trade good trending markets, and have a life.
There's so many ads for brokers, especially FX, like bucket loads. And so you've got to understand, well, how do they keep pushing all those ads out? How do they pay for all that? Because they're taking your money. Have you got another stock now?
We do.
Yes.
Next we've got Car Group.
Ooh,
car sales.
That one surprised me.
Hasn't that done amazingly well? I mean, there were times where it's just gone sideways, but I think the personality, this recent rise is showing that the personality of car has changed. So in order to confirm that, I just want to see another pullback in price.
Is this car sales in it, or is that a separate stock?
This is car, which I thought it's car sales, isn't it? But look, I mean, it's actually pulling back to the angle of the trend, the car group. Yeah. Pulling back to the angle of the trend. And so, I'd like to see it pull back between $30 and $32. And once it's done that, we could get another nice opportunity to go in it. Because like you said, Phil, I mean, some of these will just keep going.
Well, that's the thing. I mean, you look at this one on the monthly chart, if I just zoom it out, and you think, let's just take away the cursor there, and we're sitting here in, May, July, August 2020, you might have argued, oh, you know what, it's run too sharp, too hard, I'll stay away. And then fast forward if I can get my mouse cursor over, fast forward a few more years, it's gone to brand new highs and running on that same momentum. So when these stocks keep outperforming and showing you that they want to do these things, you can't really avoid it.
All right, let's show them another one, eh?
All right.
Let's keep the momentum going.
NIB Holdings, Janine, what do you reckon?
Now this wasn't one of my favourites, but it may. But if, look, at the moment it's looking a bit toppy in terms of these highs here. But if it actually managed to get through those highs, which, I mean, we've seen, CSL trade sideways, we've seen periods where Cochlear went sideways, all of them have done some sort of a sideways move or pullback, and ideally I'd like to see it pull back down here to $6 before the next opportunity. But once that unfolds, then this could go back to being what it was before and have another really nice trend. So where the stock has had that personality in the past of having that consistency, I wouldn't discount it completely. I wouldn't just assume that it's going to repeat it again as a given. Yep. But that once it's got a track record, there's a high probability that it will do it again at some point.
Yeah, so what should people be looking for then in that?
Nice trends.
Yep.
Where it's recovering relatively quickly.
Yep. Some
sideways consolidations in there, and then a breakout of that, continuation. Yeah.
So that's just simple, isn't it? Really, really simple. Because I know during 2003 to 2007, that's pretty much all we did for our clients and traders, and we had 92% success rate, and we didn't try and get smart, and we didn't try to trade hundreds of stocks all the time. It's just find some great stocks and just trade those trends and make sure that getting good growth stocks. Have we got one more stock? Or
we do. We've got JB Hi-Fi here, which again, if we just look on the monthly chart zoomed out, you can see that this one continuously breaking through to new all-time highs. And you just mentioned a good point, Janine. You stress test these stocks. A good way to know whether they do fit the criteria for consistency is to stress test them during your GFC times, during your COVID time. So during times when the market does experience falls, and see how these stocks hold up. Yeah. Because that's going to give you an indication of how strong they are and how they recover from those periods. And you can see this one.
I think what happened, in the tsunami when, after the GFC, that's a really decent test for stocks, because a lot of stocks had come out of the lows from the GFC, they'd taken off, and this one's a really good example because it went to new highs, but then around about the time of the tsunami, a lot of them pulled back again. But how did they recover from that? And did they have decent periods where they were had strong rises. So this is showing, these earlier rises are showing that repeatability going forward.
Yeah, showing you that the company is strong, and there are buyers overwhelmingly more than sellers in this stock for a long time.
Good point.
Now, you haven't talked about Macquarie, which is one of my favourite
Well,
stocks.
I wanted to put it up higher on the list, but Phil and I had an argument.
Well, you should have got me to be the judge. I've got double the votes.
When I wasn't looking, he actually moved it.
I did.
So we've got Macquarie. Would you like to see it?
I would love to see Macquarie. I'm glad you mentioned that.
Okay. So look, I'm really excited about this one because of the move that we're seeing at the moment. Now, just in the same vein that we were talking before, the history here, what some may actually be shocked to know, maybe you've never seen a history of Macquarie before, but you may be shocked to know that Macquarie fell nearly 84% or around 84%. That's not right on the bottom there, but just to be pedantic, I have to move it.
That's the engineer coming out, isn't it?
So look, about 85% fall. Now, most people wouldn't have thought that Macquarie would experience that sort of fall, being the company that it is and was then. But, it did go back to the same personality that it had in the past, similar sort of patterns, nice consolidation sideways and then continuing those rises. So, and a nice recovery out of COVID, which, I'm not counting COVID because that was an artificial situation there. But from here, well, anything's possible. If you just look at that sideways consolidation that happened before the top there, we could get another really strong rise out of this one.
Cool. Well, thanks, guys. I love what you're talking about there and some great stocks. Well, that is it for our topic for tonight. Now, stay with us, as we've still got plenty of emails and stocks to go through. Now, for those watching on YouTube and Facebook, you can watch all of tonight's show plus the additional exclusive content, including more stocks from tonight's show on talkingwealth.com. So head over now and grab your free 7-day trial. Now, on talkingwealth.com, you can also watch our weekly Australian stock market report, where we share our views on the market. Now, every week we share multiple stock tips that will pay for your yearly subscription to Talking Wealth. And if that's not enough, you also get hundreds of amazing interviews with global industry experts in the stock market, finance, gold, money management, mindset, well-being, fintech, artificial intelligence, business, and loads more. This is all on talkingwealth.com. Now, moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 0392909988. That's 03 for Melbourne, 92909988, or you can text the number on your screen. Now, whilst we wait for your call, let's get into our next email. Now, this question is from Daniel, who asked, "Hi there, and thanks for the great show. Can I please have a few words about shares outstanding and shares on issue? Are these terms the same, and are these statistics related with the volume? Thanks, Daniel." Janine, what do you reckon?
Yeah, I guess when I get questions like that...
you say, just go and Google it.
I do. I do. I mean,
go to the ASX, ask, and the answer's there.
What would you like me to say?
Whatever you like. Feel free to tell me to shut up.
Gee, that's a good one, isn't it? I might take advantage of that.
Go for your life.
No.
You can answer, Daniel.
Look, I don't really know that I'd like to pass this one on to Phil. Can I do that?
Well, it's not related to volume. Shares on issue, and it's just basically how many shares that company has available for free trading. That's all it is, and it has nothing at all to do with volume, because the company might have a million shares available on issue, and they could be traded 5 times in a day. There'd be 5 million in volume, regardless if there's only a million shares. So totally separately different. Really, do we really look at how many shares are on issue, what's available there? It's more about liquidity to us.
It's about what's going on every week, like you say, the liquidity, and for an individual, it's totally irrelevant.
Yeah.
For someone who's trading in a fund, it is relevant because you want to know that you're going to be able to get the trades into the market and you're going to be able to get out at a price that you want to get out. So that's really where it's important.
Yeah, that's answered. Hopefully that answered your question, Daniel. Well done, Janine. Anyway, now we have a question from Patricio. He says, "Hi, Dale, Janine, Phil, thanks for the show. A few questions and many answers that confuse me. The first question, when can I sell a stock and still get the dividend?" Phil?
So You've got to hold till the ex-dividend date. And I know there's another question coming about franking soon.
Correct.
So let's get to
So the answer is, if you own the shares on the ex-dividend date, then you'll get the dividend. Question 2.
Prior to the ex-dividend date.
Prior to the ex-dividend, prior to the
mean.
ex-dividend date. Question 2, what is the 45-day rule for dividends? And he's asking so he can claim franking credits on tax returns. What answer?
Yeah, you've just got to make sure. Now, I always get confused with this, and sometimes I say to the accountant, now, does it actually work out to be 46 days? You know, because if you get that wrong, you're really
That's the
buggered,
engineer again. So you've got to hold that stock at least 45 days before the ex-div date.
Plus the buy date, isn't it?
Sorry?
After the buy date.
After the buy.
Yeah.
So make it 46 and that'll
That's
make
what
it
I
cover it.
was
So 46. His third question is, why did LPI disappear from the ASX market? You can do this one, Phil, I'm sure.
I think you told me the answer to this.
I did tell you the answer. That's why I know you should be able to answer it.
Did they delist it? Is that
Look, I'll just answer these myself,
A
guys.
takeover.
Takeover, sorry.
LPO got taken over by a company from Chile. And sometimes when you get a company come in, they'll buy all of the shares in that company and then they'll take it off the exchange. It happens every now and again. Generally, it happens to mining companies and some of those smaller cap mining companies. So
Or it happens to those stocks that I've spent a lot of time analysing and all of a sudden they get taken
And
over.
that annoys the
How
hell
many
out of
analysts
you.
out there know what I'm talking about?
Yeah,
then?
so they'll slowly keep buying shares. And once they get to I think it's 90% odd, they can then do a compulsory acquisition of the last shares and then take it off the market. So that's what's happened here. Question 4, now we're going to get to a chart. He says, what is the future of CXO? Regards, Patricio. So now you can answer,
I can help you. I can help you on this one, Patricia. So on your screen is the monthly and weekly chart. And look, I'm not sure whether you own this stock, Patricia. Did he mention that he is?
No, he's just asking
my thoughts. Yeah, well, just one look at this chart on the monthly. You can see that obviously it's been falling. There was a period around September 2023. I know we spoke about this one not too long ago, where the bars were kind of tightening up a little. There was potential for it to find support and reverse, but there's nothing here that I can see that it has stopped falling again. April's taken out March's low. I will draw you some potential levels where it could stop. And I was just blown through that level, let's just say, so that's probably not one. But if we zoom out a little further, another level where there is potential perhaps of this stock stopping somewhere around here, or even if we zoom it down back into the, what if I can get my mouse go, so that's 6, 7 odd cent range.
Yeah, when you getting down to that sort of low, it's sort of splitting hairs.
It is.
You know, you could just sort of say, well, it could go right down to the all-time low.
Look, it could very well do that, but for now, it's showing no signs that it's reversing. So I would be just staying out of this one.
Well, can I ask a question for Patricio?
Yes.
Because there's the other stock, LP1, I think it was, or LPI.
Yes.
I believe is a lithium stock. This is core lithium, and he's asking these questions about dividends. So are these stocks that he should be looking at?
Not for dividends.
Not for dividends, no.
No way.
So should he be investing in these stocks?
Not if, I think it's a high risk, you know, really, given the fall. I mean, would you say that the stock was worth investing in back here? Well, yes, it was. But when you see a sea of red like that, it's not a stock for investing in and it's not a stock for dividends.
So he should be looking at the stocks we talked about in the main topic, not these sorts of
Big
stocks.
stocks.
Because, I mean, obviously, you know, great we're answering these questions and we had a bit of fun answering those, but they're quite basic questions.
Actually, he could go back and look at one of the previous shows that we did. All he has to do is go onto our YouTube channel, Patricio, and look for the shows that we did on dividends. That'll give you some really good information.
Very, very good pick. Well, now we have a text, guys, and this one's from Jack, who is asking, where do you see Aristocrat reaching $46? So Phil's going to bring that up. So do we see Aristocrat getting to $46?
Oh, very likely. Very likely. I mean, if we've got the chart up here, obviously on the monthly you can see that the stock's come back to around that $39, $40 mark, which it is somewhat respecting this momentum line here, if we just draw it very vaguely or loosely, if you will. So it is finding some support. You can see that obviously the close is, you know, well up from that low there, and $46 will be just back in this range through here. So to me, it looks like it is in that medium term or longer term uptrend. It's obviously had that, you know, pull back all the way down to 40.
But it's not a good sign, is it, to see a stock go 1, 2, 3, 4, 5 weeks down straight?
Look, it's not a fantastic sign, but from a broader perspective, it hasn't taken out the lows of October 2023. So to me, technically, this is still in an uptrend. So I wouldn't rule it out at the moment. 46 is definitely doable.
Yeah, but if we're talking long term, medium term, short term, what are we looking at there?
The way this stock moves, it could happen in the medium term, 4 to 6 weeks. Yeah.
So you said as long as it stays above this low here?
Correct.
That's right, yep. Okay.
Yep. If it breaks through $40, $39 in the next move coming, next couple of weeks, I would be changing my mind.
I'd agree with him. I might change my mind sooner though. just because I just don't like the look of it. But if it came back really strongly, probably, I don't know. Look, the close here, if we look at the open and the close of that week, it was a bit of indecision. They were around the same sort of level, but when a stock actually comes down, closes down at a level, and then the following week reverses up, sometimes that can just be the short sellers jumping out of it. So, and then if it goes and reverses back below that close, well, to me, that's a sign of weakness. I wouldn't be thinking much of it then.
Oh, okay. We've had a look at some really good stocks, haven't we, tonight? So, well, let's see if we can find another one. Now we've got a text from Liam who's asking, is now a good time to invest in Appen? It has been trending sideways the last few months. And why are you laughing?
Because it's a stock that you follow.
I am so close, but I'm not allowed to tell anybody that.
Okay. Yeah, you want to get in.
I've been waiting and waiting and waiting. Yep. I've been patient for 2 years.
I'd laugh if there was some sort of other announcement and all of a sudden you couldn't get in.
It happened before. There was a stock the other week that I was looking at trading, and I remember saying to Phil, and he came into my office, and I went, damn! I was had already set up ready to trade this, and then I had a really busy day the day before, and I missed the entry, and it was just gone off, and I went, yeah, that doesn't happen here, does it? He goes, yeah. Happens every now and again.
All right.
So Appen.
Appen, now, it's actually made a nice move off the bottom, like you're saying, and 1, 2, 3, 4, 5 weeks up, only 1 week down, more or less, and then a couple of weeks up. If it takes out that high there of 90 cents, it's still not through my dollar mark.
You wouldn't do it.
No.
So it's got to go through this hard and fast rule. If it's under $1, I don't want it.
It's got to close well and truly above that dollar level. Yes, you're right.
God, I used to trade like MIM, which is years ago. I used to trade that all the time. It was so regular. It's so easy. I could close one eye and have one hand behind my back and make 100% really quickly, because it would be under $1. And it'd give you a trigger, and then it'd go to $3, and then it'd go all the way back under $1 again, and it'd go back up to $3, then it'd go again and again. The last time I bought it, 2 days after I bought it, takeover bid, and I think I made 100% in 3 days. And it was so regular. And it's again what we're talking about earlier is about pick stocks that really trend well. And it's like that recording that I mentioned before that we did with predicting the market crash, how it's going to unfold, what we're going to do. Phil and I brought up a chart of CommBank and showed how regular that is, easy that is. We did the same on Bitcoin, we did all the odds, and this is stuff that we do all the time. And I think if people take the time to go to talkingwealth.com and actually watch that hour video, they'll learn a lot.
Definitely.
To me, it's worth looking at, and to me, not just from a point of view of where the crash is, but how to actually read that right-hand side of the chart, which is blank space. If you don't know what's going to happen in that blank space with a high degree of accuracy, then you're going to be hit and miss in your trading. Because what we see is people with these complex plans that are just looking for a buy price. They're just concerned with the buy and sell price. And that's the least that we're concerned about.
Or they're so simple, they've got nothing in it. Or just no substance.
Something like that, I don't. But I digress. So, have you finished with everything on Appen, or do you want to talk more on it?
Yeah, no.
Do you want to have a go at this one?
Obviously,
you have a go at it.
Obviously, it's.
They know what I'm excited about. I'm just not in it.
Yeah. Obviously, it's been falling, and it's been
Actually, before you do, could I just say one thing? If someone who was inexperienced rang into the show with this stock, what would you be telling them?
Do they own it or not own it?
Because I don't want it to be, Dale said, this stock is a good stock.
Do they own it, do they not own it?
They don't own it, but they're looking to, and they've got very little experience.
Sit on your hands
and pick another stock.
Pick another stock. So, because if that, it's gonna, it's like, I have no doubt when this stock moves, it's going to move. But the point is not about that it might move 100% or 200%. Is the point is when do you know to get out, and when do you know to stay in with that? And all too often we see people, the retail traders who aren't skilled, who have this
can I say, this delusion, and it's the, you know, that's the Dunning-Kruger effect that we talked about on a video on talkingwealth.com. That whole video is like an hour long. We talk about it. There's a point that's called the top of Mount Stupid, which is where people who believe they're traders, but you know, if we said to them, you know, on a scale of 1 to 10, where do you think you are? They'll probably say 7 or 8. I've seen this with people before. But then if I go, okay, well, let's put Janine and Phil next to you, what level you're at now, comparing your knowledge and skill and experience to them, and they're a 1 or a 2. So, but they're at this delusional state thinking they're much more confident, competent than they really are. But when you look at it, they've got really complex trading plans and strategies. Their trading's inconsistent. They jump out too early. They get in too early. They get out too late. There's
a lot of them trade daily charts and just looking at
daily charts,
moving averages and going
they'll
in
jump
and
into FX before they know how to trade anything else. They've never traded a stock in their life, but they'll trade FX. So to me, that's what we're talking about here, to make yourself simple and you'll make more money. But I think I better shut up and get off my soapbox. What do you reckon?
I think we're done then, aren't we?
Janine might get out of boxing gloves in a second on me. Anyway, remember to show your support for our channel and smash that like button if you enjoy watching. And you want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Now, before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it a viewer question, or was it what Janine was saying just before? Let us know by commenting below, and thanks to those who are all watching on YouTube and Facebook. Now, if you are watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all of that and more.
Next week, in our main topic, we get into 3 top technology stocks to buy for beginners, plus trading tips for volatile stocks. So make sure you join us next Tuesday night at 7 p.m. Australian Eastern Time. Now, if you love the show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each and every week into bringing it to you. If you are subscribed, then you'll always know when we go live and put up new content. As always, thank you for joining us. For now, goodbye, good luck and good trading.